Hi, how's it going? How are you all doing? Welcome once again to the Locos de Wall Street Stock Market Q&A this Thursday. It's already become a classic on the schedule. And like with everything, always, well, every situation has its positive side and its negative side. On the positive side, we want to thank you for the great reception this show has had. I think it's almost at the point of surpassing our classic Sunday Sanadin show. It's clear that you all love this format. On the negative side, well, I have to start with some bad news. We won't be able to answer all the questions you send us. I see there are already questions coming in since 1 in the afternoon. This is going to be like. I'm sure some of you are already on Foracocious, trying to grab the first post and everything. And we're going to have to find a way not to answer just whoever asks first, but rather, well, more like, based on the quality of the question, you know what I mean. So, jokes aside, thank you all so much for your support, because the channel has reached 80,000 subscribers, and I want to thank all of you for that. Today, as always, we have Miguel with us, and we're going to take turns bombarding Albert with questions. Miguel, how are you doing?
I'm doing great. Just to let you know, maybe I'll take a bit of the blame myself because in some comments, people often say, hey, I forgot to ask this. And I think, wow, if you already have the question, ask it beforehand since the live stream is already scheduled. So I blame myself for that.
No, that's a good problem to have. The real issue would be if we set up a Q&A session and the three of us were just sitting here waiting for questions to come in. But, well, that's far from reality. And in the end, credit where credit is due, the real driving force behind this program running smoothly is Albert Milan, our Director of Investments, let's call him, at WS Financial Research. As you know, that's our Investor's Guide service, which has been getting such great results. Now we'll talk specifically about how the portfolio is doing. Of course, this week there's been a bit of a pullback, no magic tricks here, but we always try to answer all your questions. Albert, how are you? How are you doing?
How's it going, Antonio? Today, well, I also want to join in thanking everyone who's here, especially since today we're on at a special time. A bit later than usual, right? Like I was saying, it's a bit later than usual, but we'll try to make it feel shorter. And for those of you joining us, we'll do our best to answer as many questions as possible. So,
Fantastic. Well, yes, that's right. As you know, the witching hour, the stock market Q&A is something we always do. On Thursdays, sometimes Wednesdays, but that's easy enough. You follow us on Twitter, you're on our Discord, and you stay informed. You hit the notification bell on YouTube and you stay updated. Well, after this little thank you preamble, I'm moving around a bit because questions are still coming in. Let's start from the beginning. As you know, this segment is also sponsored by Investing. Investing is an investment platform, really, a fantastic one. It's the one we use. It's the one we'll show during the Q&A, and you'll find a link as a thank you. In the video description, there's a link if you want to sign up for this platform using the WS code, the Locos to Wall Street code, and you'll get an extra 15% off. Just click the link. I'll put up the QR code in a moment for those of you watching on TV, and with the WS code, you're in. Albert, let's get straight to the point. We always bring up a topic to help break the ice and get questions coming in, even though there are already a ton. And the topic we've brought today is very current. We could have picked another one, because honestly, if there's one thing that's constant, it's that there's always something happening in the stock market. But you've chosen a topic that's the quantum bubble. There are a lot of people talking to us about quantum investing. In fact, let me give you a spoiler. Miguel and I recorded a fantastic show the other day, a great podcast, don't miss it, with a valuator who's been valuing companies for 30 years. And teaching company valuation in one of the best master's programs in Spain, and he was telling us about this type of investment and what's happened. Has the bubble burst? What's going on?
yeah, wait, Antonio, you kind of froze up a bit. I don't know if it's me or you.
Are we losing you, Robert, or is it me?
I can hear you, Metallico, but I don't know if it's you or me.
It could be me, huh?
I can hear both of you fine. So if you want to confirm in the chat, EDEN.PA.
I can kind of hear Miguel, but
You both sound fine. All right, okay, let's keep going.
hold on, please, just a moment.
Both of you are perfect. Let's close here. 1,000 tabs open for each of us.
Yeah, let's see if he's back. I think he'll be back now.
Sorry for the live show hiccups. Here we go.
Let's see, is it better now?
Much better now.
All right, that's it. I don't know if it was me or you or what. Well, in any case, these things usually get sorted out quickly, right? Live show stuff. So as we were saying about quantum, for those who don't know what we're referring to, is about quantum computing. You know, it's based on taking advantage of the fact that each bit in computers is either a 1 or a 0. You can use what's known as a qubit, which can be in two states at once. That is potentially a very disruptive technology, and for example, think about cybersecurity, passwords, and so on. That would allow for exponentially greater computing power than what we have now, and could put bank accounts at risk. Any kind of encryption, this is just one of its uses. In others, the next topic will be about Bitcoin, etc., although there's a lot more myth than reality. In any case, it's a technology that's very interesting and potentially very, very disruptive, but it has never been implemented at scale. Because to do it at scale, yes, there have been tests. And now we're going to talk about an example, which is Google's case that we mentioned in the title and showed in the image a bit. Honestly, we have someone amazing, Irene, making the thumbnails, really interesting work, right? And the thing is, it's never been done at scale because it requires certain conditions, in this case, temperature and the stability of the qubits and the whole system, that don't allow this to scale. Just to give you an idea, they've done tests with 20 qubits and so on online, which is already a lot, but you would need thousands for the kind of breakthrough we're talking about. So it's still a long way off. It seems like going from 20 to 1,000, just to say something, is a huge leap. In any case, there are some companies that have become trendy. You know how these narratives can really influence things. And here we have RGTI, which is one of the most typical examples. IonQ is another, and so on. These are companies that in reality don't have any real technology because, as I mentioned, this hasn't been done at scale yet. And not only that, but it's still a long way from being implemented. In fact, for example, in the case of Rigetti or RGTI, they themselves say they still have at least 10 years of research and development ahead of them. So they're still very, 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 very far from being able to do anything. But if someone looks at the chart, they'll see that it went from being at $1 in 2023 to $46 last week, with a market cap of $12 billion. It's absolutely insane, especially considering this company has no revenue and isn't going to have any in the short term. Well, obviously it seems like a bubble has formed. The thing is, when you go against the narrative, it's really hard to do. Or to stay, let's say, rational. You know that saying, right? That the market can stay irrational longer than you can stay solvent. A lot of people have been wiped out by this because even if you see it's a bubble, when it's inflating, it's kind of crazy to go against it. To make matters worse, yesterday Sundar Pichai from Google came out and said that one of their chips and one of their programs, Willow, had made progress in this area. As I was saying, tests have already been done, and in this area, Google is at the forefront. Some tasks have been carried out using quantum computing, and they're stable. In fact, even Elon Musk publicly congratulated them on X. I don't know if you saw that. But where things really went crazy was when, late at night, a rumor leaked that the Trump administration was planning to invest in some of these companies to take a stake. So that really made things take off. Like Pablo says here, we'll probably see humans on Mars before we see fully functional quantum computers. I believe that too. But in any case, you can't fight against a narrative like this, especially now that we see if the administration, Trump, and so on get involved, you just end up in even more trouble and on the opposing side. So pretty much everyone can see that this is a bubble, at least from a fundamental point of view. It's really hard for these valuations to make sense, especially with how quickly they've risen. Proof of that is that the Instagrammers have sold everything and then some. Even the CEO of Rigetti has sold everything. I suppose he never imagined reaching a market cap of 12 trillion. And that's basically the news, Antonio. I was talking about the irrationality that sometimes forms, and I brought up this news not just for the anecdote, but to contrast it with other ideas that we'll discuss as people start asking questions, if that's okay with you.
Albert, just a quick confirmation question. and I don't know if I'm stepping into something you don't want to be public. You're a mathematician, right? Yes.
Yes, I am a mathematician. A mathematician by, as they say, training or maybe by deformation. So, for better or worse, obviously I know the field as well, etc. Although quantum computing was by no means my area of expertise, right? But I'm a mathematician, and I do have friends working on some of those problems, you know? For example, one of them, and I won't get into details, works at InMind, which, as you know, is now the seat of Google's Guide. And all this that we're seeing now, he already saw it 10 or 15 years ago, you know? He was already working on this. So, yeah. It's definitely an interesting field, but as an investment, well, it has its ups and downs.
Look, my oldest son, who's about to start college, is grinding away in high school, man. I feel so old. He wants to study mathematics. Right now, that's the degree everyone's fighting over. Albert, have you gotten any use out of it? Sorry for going off topic, but since we're talking about quantum and all that, have you gotten any use out of it? Honestly, for me.
It really has helped me a lot. Not so much professionally, like saying, hey, what I learned, I've applied it in theory, and so on, but more because of the way they teach you to approach problems, you know? A bit more analytical, having a good sense of statistics, which seems obvious, but it's not that simple. I highly recommend a book called Thinking Fast and Slow by Daniel Kahneman. It's excellent. And it will teach you or really hold up a mirror to how bad we humans generally are at statistical intuition, right? How hard it is for us to have that kind of thinking. That's helped me a lot. In my day-to-day, you see, to do valuations and so on, you don't really need a crazy high level of math, right? With addition, subtraction, and multiplication, you can get by, but it really helps to approach problems above all.
Here's a question from Francie Tassai. Now we're going to move on to the rest of the questions. Don't get nervous. But anyway, this one is right on topic. He was asking us, what algorithms, besides Shor's and Grover's, are there in quantum computing right now? I don't know if that one catches you off guard too. No, not for me.
It's changed for me because I don't really know where the cutting edge is in this field. Not even close. So I wouldn't be able to tell you. You probably know more than all of us here put together, Francisco, especially about quantum computing, right?
For sure, if he's asking this question, it definitely seems like it. Well, all right then. Very interesting what Al has brought us. We'll leave it there for you to think about. It's a topic that, just like artificial intelligence, microchips, and so on, is definitely making waves. And if you all agree, let's get down to business. Miguel, how about you and I split the selection, 50-50?
All right, great.
Before we start, Antonio, who said he wanted to, since we're taking it a bit slow, I also wanted to compare these ideas we were talking about bubble-like valuations. Thanks. Separately, and you know we always like to bring up a company as well. So, as you know, we're projecting on the investing platform, which is what we use for our analyses, in case anyone is wondering, hey, where are you getting this from? Well, it's from Investing Pro. I think Antonio already put up the discounts we have on the banner earlier, etc. And look, this is a company we talked about in the research this week, okay? We talked about it this week, and it's gone up over 20%. All right? That's why I'm sharing it. Albert, if you and I...
If we showed the WhatsApp messages between you and me, some people would fall out of their chairs, you know? Look, I'll tell you about it. I told Albert. He posted it in the Resilio Discord. He posted it on Monday, and I'm always rushing around, and I'm all over the place. Honestly, I think I'd do better if I just focused on being an investor instead of getting involved in 1,000 different things. But anyway, I told him Monday night, after the market had already closed. Damn, man, I saw it and thought, well, I'll keep an eye on the opening tomorrow. Yeah, make sure you watch it. 1,000 things run through my mind, and it opens up 15%, right? Or something like that. Or it ended the day up 20%.
Here it is, up 20. Oh, let's see if it shows up here. Hang on. The chart just isn't loading for me. No, but the thing is, of course.
It doesn't show you a week, but anyway, yeah.
22, yeah.
Nothing, and I was busy with 1,000 things, and when I see that Alvaro texts me, I say, Alvaro Miller, and he asks, hey, did you buy at the open? I thought, that's it. I already imagined the worst, and sure enough, it was a bombshell.
Right, and here's what I want to highlight. First, for those who don't know, many of you might actually be clients of Edenred without realizing it. It's a company that provides employee benefits, like the typical transportation cards, meal vouchers, daycare tickets, and so on, which offer tax benefits for employees. What they do is charge the company upfront for the amount they want to offer their employees. So they get the money in advance, they have float. It's kind of like an insurance company, meaning you receive the money today, but you'll have to pay it out, say, in 60 days, 50 days, etc. So you have that money for a while and you can use it. When interest rates are at zero, it's not that interesting, but when rates are high, it is because you can invest that money short-term in debt instruments and so on, and you earn a return. So what happens is the employee has a card, a voucher, etc. for that amount and spends it at a restaurant, hands it over there. And the restaurant goes to Edenred and asks to get paid. And where does Edenred get paid? Well, they charge the company about 1% or so, whatever they can, right? But let's say around 1%, and then to the end customer, the restaurant, 5% for percent and so on. So it's a business like Visa. In the end, it's a toll transaction for offering their services. You can already see that it's a really high quality business, right? Because of its business model, how scalable it is, and so on. So much so that, well, this, for example, is their revenue chart, okay? You can see it's not bad. It drops in 2020 because people were at home and not eating out. But otherwise, nothing. If we go further back, it's up. Not only that, but you can see their gross margins are close to 40%. If we look at cash flow or profit, it's the same businesses of extremely, extremely, extremely high quality. Here we see EBITDA and so on. So what happened? Well, if someone looks at the chart for this over 5 years, for example, or even 10 years, right? We see that it was a business with the typical chart of a compounder, right? It was doing really well, and suddenly it dropped from 57 to 20. Now, this week, it has gone up to 25. What happened in between? If profits have gone up, then clearly what could have happened, and in this case, that's exactly it, is that the multiple has contracted. Why? This used to trade at 25 or 30 times free cash flow, always because of the quality of the business, its scalability, the outlook, and so on. And now it trades at 5 or 7 times. If you adjust a lot, right? But anyway, let's say 7 or 8 times, it doesn't really matter, just so we don't have to adjust for items that are a bit more complicated. What is the market afraid of? Well, regulation, for one thing. There have been a few scares, right? Governments saying that maybe profits should be limited a bit, that they can't charge so much, and so on. The most serious case, let's say, is Brazil, which is one of the most advanced markets in terms of employee benefits, and where they said that, well, maybe to bring down food inflation, these players would have to be bypassed. This was rolled back, but it did cause quite a stir and made the multiple collapse. The company is still growing. In fact, on Monday, the framework, they gave important guidance, a third quarter trading update, and that's what we were hoping would perform as well as it has. And what the company is doing is saying, well, since I'm so cheap, apart from the big dividend it has, which we're talking about 7%, we also see that even though this might seem like a lot, it doesn't have to spend that much on capital. If you generate 1,000 million in operating cash flow and spend 200 on capital, you have 800 left over. It's a relatively low capital intensity. It makes a lot of acquisitions, though, of small local players and so on to expand its markets, which is good. Gives it an attractive dividend as well. Steady one, let's say. And then what it's done is say, well, if I'm this cheap, here you can see the bar, right? Well, I'm going to buy back my own shares. And that's what it's doing. So a company with tailwinds for its business growth, strong fundamentals, a quality business going through a rough patch, someone might think it's permanent or not. That's obviously where the question is it an opportunity or not? As you know, nothing here is a recommendation to buy or sell. We're just discussing interesting things. And in my opinion, the market has punished it too much. So, well, its multiple has contracted from 37. I don't know if 30 was the right number for a business like this, but I also don't know if it's 7.
Super interesting.
Go ahead, Miguel. Nothing, just that I've already added it to my Investing Pro watch list and left it there.
That's right. That's right. Plus, it's one of those value sectors that hardly anyone looks at. Not disruptable by AI, and in the end, I think it shouldn't be an excessive cost for companies, and above all, it solves a problem for them.
The good thing about businesses, like in the case of Costco, which, as we discussed last week in Nyxlip's letters, and he always says, hey, when you find a business model where everyone wins, customer, supplier, and so on, break time equals 0.5s/. That's a real gold mine, right? It's fantastic. And in this case, that's how it is. The company that can offer it wins, the restaurant with more of that flow wins, Inert's company makes money, and the customer saves or gets a significant tax break, right? So when you don't have to take it away from anyone, when everyone's happy, that's ideal.
Miguel, let's go. Let's get started.
Yeah, Albert, I wanted to start by asking you about a company where we've just seen this rise, and one that's actually dropped quite a bit today, which is Evolution. Miguel Ortiz asks, "Hi, what do you make of Evolution's results?" Sorry if you've already talked about it. I couldn't get here earlier. Well, Miguel, we haven't talked about it yet, so that's the first question.
If the case of Evolution is also very interesting, mainly because it is in part quite similar to the Eden network, although it obviously has its own particularities that we will now examine. Break time equals 0.5s/. Still, it is a somewhat similar case overall. Okay, this is a company that's dedicated, as you know, to online gaming, offering solutions to operators, online casinos, etc. From live casino, these are, let's say, live games, but they're offered through platforms, and they also have an RNG component. The thing is, this was a company that was growing like a rocket. You can see it here. The growth it had was just insane. Obviously, the same goes for profits, etc. And the market recognized it as such. If we look, for example, at the previous chart, we can see how it went from 49 Swedish crowns to 1,500 Swedish crowns. In between, there was a short report that has now been shown to be fake or at least pretty shady. And we get here to 2023 or even 2024, where we've seen these fundamentals getting through the rough patch of 2022, which, as you know, was tough for the tech market in general, down to 1,300. In other words, a textbook compounder. So what has happened since then? I had reported some results, and that's why it dropped so much. If we look more at quarters here, we can see how the growth, right? So, well, today's results aren't in here yet, obviously, but anyway, they go from 30% growth to 3% growth, right? So when a growth company becomes X growth, right, it stops growing and the market quickly collapses its multiple. Because obviously that's what reflects the positive fundamentals and the valuation, right? It wasn't that expensive, but it did reflect certain expectations. So in the case of Evolution, the problem is that they have some markets that are regulated where there is clear regulation and others that are unregulated where there isn't really any regulation of online gambling, at least not so clear. And the risk of growing a lot in unregulated markets, which is where they were expanding, is that if regulation eventually comes in or authorities start to go after you there, you could have problems making that growth sustainable. So they've taken some proactive measures to exit unregulated markets, or at least to reduce their exposure there, especially in Europe. That has really slowed down their growth. Then there's an economic factor as well. At the end of the day, consumers are struggling a lot more. They don't have as much disposable income to spend on this and so on. That's just a fact. And then in Asia, which had also been a growth driver, they're having a lot of problems with piracy and cybercrime. So I'm going to present the results, which actually show that revenues have even declined. It's true that it's because of currency effects. Otherwise, they would have grown. But even so, the results are pretty weak because in Europe, they've managed to get back on the right track. In Latin America and the United States, they're also growing very well, but in Asia, they've fallen behind. They still haven't figured out how to fix that, and it's hurt them. To me, it's a clear example of a company that's really, really cheap with a lot of quality. And on top of that, what it's doing is paying a dividend of 3, well, for almost 5% actually, and share buybacks of 3 to 4%. So what is it doing? Right now, that doesn't matter. It seems like people just don't care. Eventually, when they manage to, let's say, solve their problems, it's not going to grow at 60% anymore, but they could go back to growing at 10 or 15%. And at that point, I think we'll see the fundamentals and the price take off. In the end, they're creating value right now by buying back shares at these prices and continuing to improve the business. And I think it's just a temporary problem. Are you guys following it too?
Yes, actually, I follow it that way too. Actually, Albert, we have a ton of questions, but I wanted to ask you a quick one out of curiosity. Who is this type of company interesting for? A client who is, well, it sounds a bit bad, right? But is it a client who is really addicted to gambling? Or is it the client who has a healthy relationship with gambling and is a regular customer?
In general, they always want to extend the customer's lifetime, right? So it's not about burning them out, not about draining them, etc. A healthy and long-lasting relationship. Their clients are not the end customers, okay? It's not B2C. This is B2B, meaning their clients are not just anyone. William Hill, B365, etc. They have a 99% client retention rate. They never lose a client, and the one they lost came back, right? So it's a fantastic business, but obviously it depends on the end player. If no one plays as the end player, then they won't have any clients, right? So what they actually prefer is to extend this lifetime. So what you were saying, Miguel, is relevant.
All right, we're going to start picking questions because, well, I can already see it's going to be impossible to answer them all. So let's focus mainly on current events, on things you like and that are in demand from you, from the community. Oil. Today, oil has gone up on the back of oil prices. A lot of companies are rising, and people are asking us, for example, about the offshore sector. Albert, what do we say? What should we say about oil? While Albert is talking, I'll start putting up the specific questions.
Oil is up significantly both yesterday and today. Yesterday, it closed nearly 4% higher, and today about 6%. I haven't checked lately, but it's a big move. It's not mainly due to fundamentals, since we're in a cyclical downturn. There's broad agreement, and it's clear there's a surplus in the market. We'll see how long it lasts and if it's sustainable, but right now fundamentals don't support these increases. It's due to geopolitical issues. Yesterday, they announced tighter sanctions against Rosneft and Lukoil, two Russian companies. What this could do, for example, is prevent India from importing Russian oil, create problems, and restrict supply. I never trust geopolitical disruptions because as quickly as they appear, they can disappear. A lasting bullish market must be based on fundamentals. This is both good and bad for the fundamentals, right? It's good since companies earn more money. They can even generate more, but that's also bad. When prices are low, that's the cure for low prices, right? Because in the end, less is invested, there's less production and so on, and eventually the dynamic changes. In this case, if you're able to secure hedges at artificially higher prices and keep investing now because prices are artificially high, in the long run, that's not positive. What's the issue? That since they're not that high either, I think demand is going to grow more than supply can react at these levels. So in the short term, it saves you some pain and it's not a disaster either. In the case of Valaris and Transocean, honestly, it doesn't affect them much because no one is going to change their investment plans over 2 days of sanctions, etc. But anyway, they're so beaten down that any news gets picked up and the market jumps. We saw 14 in Valaris, which is just insane.
They're asking us, Albert, no digression. Brian Polo asks about Ecopetrol at its lowest oil-related.
Yes, what you said about the change in government is also very relevant, at least for me. It's just an idea. It's not the same as Argentina with Milei because obviously the change won't be as radical, but in the case of Petro, he's really been a drag on this market. So that's a factor to consider. What's the deal with Ecopetrol? We've talked about it before. It's just that they've really changed their production mix a lot from oil to gas. Okay, so I'm not that interested because if I want to play gas, I have better options. And as for oil, that's not where they're focusing right now.
Seeing this question, we're going to skip it, and I'll explain why. Diego Martinez was asking about New Princess, which is a company that's really in the spotlight after the IPO. On Sunday, at the Sunny Dream, we're going to have a fund manager who will explain it. So we're going to save this question for Sunday. I'll make a note of it, and you'll get an answer then. So let's move on to Salva Soriano, who asks, to what extent could STS take business away from American Tower if direct satellite to mobile connection becomes established? And could you analyze American Tower? Thanks.
Yes, in my opinion, there is an opportunity for disruption, but it's not total, okay? Because a satellite, it makes sense in areas where, for example, the population density isn't that high, so putting up a tower there isn't as efficient. but in the middle of a city, it doesn't make sense. Their tower coverage is what matters, right? Where you do have density, you can spread out costs, etc. So it's not going to be a complete replacement, but obviously their business could be affected. So much so that American Tower, I don't know if you knew this, is an investor in AST. Yes. They have a stake. So this is a company that I don't think is expensive. The thing is, as a REIT, it doesn't interest me as much because it's much more capital intensive, or at least potentially more so than others, and the growth opportunities aren't as high anymore. Not as much expansion as in other cases. On the other hand, they've managed their capital structure pretty well. We can see here the activities, right? To grow, they haven't diluted us much. You know that EPS isn't the best metric to look at for REIT. We'd look at CFO, etc. But overall, it's a company that I don't think is bad at all, just not mine. My favorite day in this case of Kings, but well, the business is more interesting than other commercial Kings, etc. That's for sure. Dieter Pinto.
Excuse me, Naylor Penton asks what you think about nuclear power infrastructure, not the schedule. Oklo, SMR, LU, NE. This is interesting. LEU is the top return stock in my portfolio, and I think it's hard for anyone in my investing life to beat that. Shame I carried a fortune. Otherwise, I wouldn't be here. I had 300 or 400 euros.
Yeah, well, let's see. I think they're in a mode. It's not the same as the quantum ones because this actually has a much closer business, potentially closer, etc. But I do think they're very inflated in terms of valuation. You know, we follow some others in the sector or similar ones, right? And I'm not revealing anything if I say that one of the ones we're interested in and like is ASPI, which operates a bit in the uranium value chain without actually being uranium itself. But even though I believe in the idea of SMRs, we can see that even today Canada has announced an investment plan in SMRs, etc. I see them as very inflated. I don't know what you all think, but the valuation is what doesn't convince me at all, and I don't see how it could be justified.
Yeah, but above all, look, I would still make a distinction, Naylor. You've lumped together all the companies related to the uranium sector, which are directly mining. That might seem reasonable to me, but there are different cases here. For example, I read that despite the price increase, it's true that if sanctions against Russia continue, the United States will need enriched uranium, and then it has a very strong position there. Regarding Oklo and others, and SMR, the thing is, look, these are companies that don't have any revenue as of today. They have projects, everything looks great, but as Edgar once said, we're dealing with situations where everything has to be executed perfectly to justify those valuations. Everything that comes next has to go perfectly. So, yes, I agree with Albert. Maybe this is a train that's already left the station, and this is something investors have to learn. It's tough when you see these opportunities go by. I had buy orders for SMR at $3, and out of boredom, I sold them at 5, and things like that. That's it. These are trains that pass you by.
Now, moving on to gold, Pablo Botigo asks us, how much time does Dina Corey have in processing? If there's a drop in price between the time they buy the ore and the time they sell the bullion, couldn't they end up losing money?
The cycle is actually quite short, and not only that, but there is a part that does accumulate in inventory, so that could have an impact. But look, and I'm talking short here, let's say the cycle can last about a week, etc., because it's always ongoing. So let's suppose that in 1 week gold drops by 10%, right? Like what happened on Monday. You bought it in the morning and by the evening it's lower. So in that shipment if you buy a shipment for a month, you don't get it all at once, but it arrives daily. So there would need to be a big gap between one and the other. Honestly, I see it as really bad. If you buy a shipment for a month, it doesn't come all at once, but arrives every day. If you buy a monthly shipment, you get it daily, not all at once. There would have to be a big gap between one and the other. I see it as bad. There would have to be a really big gap between one and the other. Honestly, I see it a limited risk. Not only that, but structurally we can talk from this level, right? But overall, the trend is obviously upward because of the currency's weakness, so it's not a structural problem. It could be a one-off issue and very limited.
So, Jonathan, looking at the rating agencies, they've been downgraded lately, a possible opportunity for S&P and
Look, these are companies of, I think, undeniable quality. In fact, it's almost a monopoly, right? And if we were talking about decadence before, well, let's not even mention these companies, right? They're absolutely outrageous. We'd also have FICO here, etc. The thing is, even with the recent drop, just look at how it's trading, right? And it's true, as I said, these are protected companies, etc., that are going to keep growing, which is great at a good pace, but they're still extremely expensive. It's very, very difficult or almost impossible to ever see these cheap, right? Because obviously quality is what I recommend. But notice that even with the quality of the company from its highs, it's actually quite a bit, but over the past year, they're flat. So the drop isn't as big as we might think.
Miguel Martinez brings us an old friend who missed some QNS. DMX. How do you assess DMX with the schedule and rare earths?
Here, I'm a bit contrary. I think Antonio and Miguel and I might not agree so much, but I'm not as bullish on DMX as I brought it up. So we've had the fact that we discussed it on the show. I think it's 0.30 or just over 0.30. And it's not really revealing anything if we say that we've sold almost the entire position at around 0.50. So we caught the move, which is great, but this is a company that had several catalysts or still has them. The first is that since they have the deposit in Sweden and uranium mining isn't allowed, there was a ban on mining for a year, which made the asset have a very limited value because they couldn't do anything with it. To exploit it, that restriction is being lifted, or rather, it's about to be voted on, and that will be a catalyst. That catalyst made it go from 0.3 to 1.5, a five-fold increase, which is crazy. Does this mean everything is priced in? Maybe not, but much of it has been recognized, and that's what we played on because it was a very asymmetric bet with a high chance of success, since the government had already announced it with fanfare. Now there's another phase. What will they do with this deposit? Is it going to be developed? Is it going to be sold? How is it going to be operated? So the deposit itself is mediocre. I don't think this will ever be mined, or maybe it will. There's this idea the mine will be sold, etc. But I think who's actually going to pay for this? At what price? When? Exploitation is unclear. Does this mean it won't happen? No. What I mean is that I just don't see it as asymmetric anymore. Like the first part, which is the one we played before. That's why I don't like it as much now.
Albert Sasso asks, "Hi there, could you comment on the situation with New Fortress Energy?" Thank you.
Well, it's a company I honestly used to love so much. In fact, if you remember, when it was around 60, it bought the Ego division from Golar. And I really liked it a lot. In fact, the founder is a real winner, right? What happened is that they got too ambitious, like I said, when it was around here. Well, here they bought, around here, right? So they've been too ambitious in their development, too many delays in very capital intensive projects, and so on. And now it really looks like this is heading toward bankruptcy, right? So if someone looks at the debt side, they'll see all the discount it's trading at and so on. I'm not very optimistic about the value of this company's equity. I see bankruptcy as a real possibility. So that's a risk I just can't take.
Albert Jorge Rodriguez, hello, good afternoon. What do you think about Rio Tinto? Thank you very much.
I like it. I think it's a way to do it without breaking your head over it. You can, let's say, play or keep your capital in a mining company without having to get out every time there's a boom or bust, right? Because this one is never going to leave you. You can see it here, right? This isn't the chart of a typical mining company. Usually you have a boom and then a crash, boom and crash, boom and crash, right? And in this case, well, it's actually quite stable because it's a major, it's diversified across many minerals, well managed, etc. It's a company I like. So what's the catch? That you're also never going to get the boom. So to play a thesis on the premium system, I like to be more targeted. I'll give a very clear example. Okay, Sigma Lithium, maybe you've heard of it. This is a lithium company in Brazil, a great asset, but poorly managed with many problems and low credibility. In 2020, it was at 1. When there's a lithium boom, it shoots up to 40. So you've made a 40-fold return. Of course, when things go south, now it's at 6 and we'll see where it ends up, right? So boom and bust, boom and bust. But at least if I want to play the lithium game, I get into this when the time is right. Not saying it's a good time for lithium, but if I play lithium, I aim for 40-fold returns. If I go into Rio Tinto, I can hold it, but you'll never get a win like that.
Let's call it. So those unfamiliar with commodities understand. Mining companies aren't typical like P&G or Bayer. You need to understand the cycle to catch it on the upswing. If someone wanted to always hold a commodity share, maybe Glencore is better than Rio Tinto. Or is Rio Tinto better due to its minority diversification?
Are very good. Look, in the case of Rio Tinto, you can see it here, right? It's a good company, well managed, good assets, etc. Perfect. You have others like, for example, tech. That's not bad either. There's a sale in the middle here, okay, of some assets, etc. This one is more volatile, but you can see it's doing well from bottom left to top right. And then Glencore is the same case. The thing is, this one is a bit more cyclical. You'll see that it doesn't hit you hard, but it doesn't destroy you either, right? But, well, it's not really going to do much for you either. It's not as useful for playing the cycles as the other one, right? So these kinds of diversified companies, majors, etc., are the ones to go for if someone wants to hold on without having to rack their brains. Like you said, Antonio, I don't see it as optimal for this type of company either. But anyway, they're options.
There are two questions about the same company from different angles. One is from Jonathan Zambrano, who asks us about Cellnex. And then Juan Antonio Velasco also follows up, still talking about American Tower, the RIT sector, Cellnex. Do you guys keep track of it? A 50% drop from its peak and almost at 5-year lows.
No, Miguel and Antonio, I don't know if you guys follow it. I know it.
That's right. It was a stock that became really popular in Spain, really popular. One of the few decent options in Spain, but no.
Me neither. Honestly, I have no idea.
Well, so there you go. Juan Antonio and Jonathan, I think. Unless I'm giving you a new name. Jonathan, that's right. We admit we don't know. The problem is,
Just from a first glance, and we haven't really looked into it, right? Here we have a gross profit that looks pretty good, but it's very expense intensive. And then the issue is the interest, right? We can see that this is eating up everything. So I don't know the company, but it does seem like it could be a debt problem, obviously, right? Looking at a few things here and checking the cash flow, of course, you have a operating cash flow that's actually pretty good. It's very capital intensive. That's normal for all infrastructure, etc., which is the case with Cellnex, right? Up to now, they've made some acquisitions and now some divestments. That's fine. Okay? And the problem, I think we'll see it here. I mean, it's the interest we were talking about, right? You have a fake free cash flow. Because then what we say is you have this free cash flow, 200 million, whatever, some years negative, and then you get hit with these interest payments.
Albert, there were two questions, both from Justice and someone else, about Brookfield. I only have one question for tonight. What do you think about Brookfield? I mean, after the drop in the last few months.
Well, I suppose you're referring to BN, to Brookfield Corp. And then you also mentioned the BAM part, right? In the case of BAM, for me, it's an amazing company, right? Next, this is the asset management side, let's say the decision-making part. It was really cheap when it came out, but now it's not so much anymore. It's a great dividend payer because in the end, it's not capital intensive at all. Well, Brookfield Corporation still owns most of it, right? But, well, the real deal, in the case of Brookfield, I really trust the management. I think they're very good at allocating capital, managing, and so on. What's the issue? For me, it's just too complex to follow. It has so many branches, so many assets, segments, specific dynamics, and so on, that I'm just not able to keep up with it or have strong conviction. Obviously, I like their track record. I like how they manage things. I trust the management and so on. But it's impossible for me to develop conviction because I can't understand the business. Or let's say to really know it in depth, If anyone looks at BN, which is Bluefield Corporation, aside from the spin-offs, the housing, and so on, just by looking at the chart, you can already see that in general, it seems like they're doing something right, don't you think? When you have these kinds of charts, and not because of some external factor, but because of the fundamentals, plus they're tied to trends with strong tailwinds like infrastructure and so on, it's truly amazing, right? But I'm unable to follow it in depth, to really understand it with conviction. I don't know about you two, if you own it or...
no, same here. Look, I put Bruff here in that group of companies that I would feel very comfortable with. Building a barbell portfolio and having 50 or 60% of the weight in it. I mean, these are the kinds of companies that I know will always try to create value that I can totally buy and hold because they're not cyclical. Although, obviously, someone might say, well, Bruffier, if you're at the doors of a certain cycle, then yes. But in the end, they're infrastructures that will always seek profitability, etc. In the end, when it comes to portfolio management, I prefer to be more hands on, keeping an eye on things, checking up, and so on. So, this type of barbell stock, I build it differently. So, right now, it's not within my scope. Look, before we move on to the next one, we talked about this one in Boscola. It'll be around minute 20. No, even earlier, around minute 15, because it was the first one we answered. Look, I really like this one, Albert, because it's a question a lot of people have right now. What's going on with gold? It's gone up, it's gone down. And look, Mark Gracia says, how do you see the gold mining sector despite the big rally it's had? Or,
I mean, I guess you're referring to thanks to the big rise in gold, right? In this case, yes, in
this case, more than despite, Mark, it's thanks to.
yes, because look, people are quick to, you know how emotional they are, right? We investors, well, our minds are one of the main problems when it comes to generating long-term returns. And we see that this week, which has been weak for gold, we had above all a drop that is really uncommon. A 4 sigma event in gold where it fell 6% and silver dropped 8% in a single day, which is just wild. And the next day it didn't recover. It went from 4,300 to just over 4,000. That dragged down the rest of the commodities. And what we think is, okay, this means the party's over, it's done. That's one way to look at it, and it's fine, and maybe the correction will continue. But we also have to consider that in many cases, current valuations no longer reflect what we're seeing now. Today, my smoke just presented, just now, 2 minutes ago, some truly outstanding results. Why? Because you have to keep in mind that gold mining companies are raking in money hand over fist with massive margins. Most of them produce at around 600, 1700. Just imagine what they're making at 4,000, right? If during the quarter they've managed to realize 3,500. And not only that, but their main cost is energy. So you've got oil prices tanking, which really impacts diesel costs for them, and gold at an all-time high. So you're going to start seeing some insane margins now. And when the market starts to pick up on that, I think we'll really see people start to appreciate these mining companies, right? You can see it here. Let's see, in the case of Nimo, of Anaco, it's pretty straightforward, right? We see a revenue trend that's good, but then look here at the margin, right? See how this starts climbing again. And this still doesn't reflect, let's say, what we're seeing right now. Okay, you'll see. Look here at what I was saying about the margin, how it scales up. And this doesn't include the current quarter, right? So these are companies that are going to generate a ton of cash thanks to the rise in gold prices and the drop in major costs like energy. And that still hasn't been seen. And now the third quarter reports are starting to come out. Like I said, new.
World, before Miguel asks another question, since many of you are asking about mining, but a different kind, just a quick comment, and this is my opinion. Many of you are asking about gold topics. I'll let you know in advance that we're going to do something special about gold, so stay tuned. But keep in mind what Albert said, the mining companies that are extracting gold today, just so you know, if you lean back in your chair, these are projects where the numbers and costs made sense when they started being proposed, built, requested permits, planned, and so on, 5 or 6 years ago, when gold was at 1,000, 1,500, 2,000. So imagine now that it's at 4,000, 4,000 and something, 5,000. They have to be churning out gold. If I had to take a position in gold, I look more at good mining companies than at exposing myself to the metal itself. But this is not a recommendation of any kind.
Albert Ajax asks, what do you think about iron with the turn that AIK has taken? Regards.
Yes, notice in that sense. Oh, it's the same user. He's talking about the shift in all the mining companies.
I'll leave this one to you, Antonio, since I know you know a lot about it. Well, go ahead, of course.
I wasn't prepared, and I'll share with you that I have it right here. Look, and I didn't have time. I was just looking at it because I'm playing this one with a bullish channel. It seems like an interesting company to me to play with a bullish channel. Look, right now today it's up 7.78%. The market is already closed, but for someone who wants to play it, for example, I would do a buy, a sale of a put at 50, and add a call purchase, this one if possible a little further out, for example at 55 or 60, okay? I like that position. In this case, we incur a cost, okay? It cost us 452, but if we, for example, push it further out, well, actually, if we set the strike higher, not pushing out the expiration, but the strike price higher, well, then we can play with the cost. Someone might even say, well, I want this to cost me nothing. Well, you can also, at the same expiration as the buy side, because otherwise it won't let you, especially if you're in Spain. So, okay, let's do it. I'll sell the call at 85. Look, in this case, I even get paid. So, if I don't want it to cost me anything, check out this little move we just pulled out of our sleeve, a diagonal bullish channel, the sale of a put and the purchase of a call, both out of the money. Okay, out of the money. This one has a bit more time, and we combine it with a call sale, and voila, it doesn't cost us anything to do this trade. We don't have unlimited profit, because if it goes to 95 in December, they'll take it away from us. But for someone who wants exposure and is bullish, I think this could be interesting, though this is not a recommendation, just a strategy. I know that, Albert, and I don't see eye to eye on this. Albert is more of a deep value guy here. That's why he's the deep value professor in our stock market course, because he's more methodical. And he liked it when it was at 3, at 5. As he's mentioned, yeah, that's things for us. Yeah, for me already.
It's hard for me, honestly, at these valuations and especially with this kind of business. But well, there's no denying the results. It's taking off like a rocket.
Miguel, let's go. Move on to another one.
I'd say we also talked about this one recently in a Q&A session.
Whoa, what happened here? Did it really grow by 1,200 or something like that? Yeah, that's right.
That's my turn. In the end, it's a company that has never made money and never will.
The artificial meat one, right?
Yeah, it lost a lot of distribution deals, etc. And this was already headed for bankruptcy. So what happens is that here the one-day charts don't show up properly, but well, it's fine. It's not a big deal. The thing is, it shot up out of nowhere because it did get a new distribution deal, a small one and so on, even though it's never going to make money, not even close. And it got hyped up on Reddit, on Wall Street bets and so on. So this was trading at 65 cents on October 17th, okay? On October 20th, it reached $1 and had a small uptick. But anyway, the point is that from the 20th to the 22nd, it went up to $7.39, and it would have been a good entry, okay? But then it dropped back down to $2.84. Obviously, that's how it goes. But, well, in between, the endless talks.
All right. Final Q&A, one more. Miguel, do you have another?
Yes, if we remove Mass City, they say after the drop, Westwater and shows could be interesting.
I don't know it, to be honest.
Well, if not, let's move on to another one, which in this case is from AFI24. What do you think about Micron? It looks like we're heading into a super memory cycle like in 2017. Well, before Albert comments on Micron, remember, a lot of you are joining today's broadcast right now. There are 563 of us right now, live across all platforms. Thank you all so much. Give us a like and subscribe to the channel. Remember that we have a 15% discount for all of you to subscribe to Investing Pro, which is the platform we use, the one you're seeing on screen, the one Albert is using to check data, financial statements, profit and loss, cash flow, company reports, and so on. The link is in the description, and the code is ELW, which gives you an extra 15% off whatever the best price is at any given time on Investing Pro.
Yeah, I don't really follow it that much either. I don't know. What about you two? I was just now also using this feature on Investing Pro, which I actually like quite a lot, the report feature, to see, things like valuation and so on. And it gives you some interesting data. At first glance, it seems expensive to me, like we always say, right? The current free cash flow, like you said, if we're in a super cycle again for the memory chip sector and so on, well, it could be interesting. Here we see the projection they have for 2026 and 2027. There are also parts of models, analysts who forecast what the targets are. It's useful to get an initial idea, right? To also understand where the money they generate is going and so on. But I don't follow them closely enough to know if there's a memory supercycle or not.
Manuel Alvercork, I'm asking about a company that's closely watched. Has the Puig situation remained unchanged?
Yes, it seems that it was said that they had also been trying to acquire Kering's part and so on, the agreement that's been discussed now. Yes, that's true. But it didn't come to fruition, right? It's clear that they're not the ones who ended up with it. But anyway, for me, everything remains the same. When they release their results, we should probably start to see some reaction because in the end, it's still pretty cheap for what it is. And the rest of the luxury sector is reporting good numbers. We saw the case of Louis Vuitton, which wasn't bad. Today or yesterday, well, we haven't had the month yet, but it hasn't gone badly either. I think it's more resilient than people believe, right? These kinds of sectors.
The Reset students, sorry, we mentioned this yesterday on Twitter, had a short class with the Reset analyst, so they're a bit more informed. Yes.
Very good. So let's move on to the last one. Joan Antonio from Cadena. Good afternoon. You often talk about oil companies. He sent this at 1. Joan Antonio, we won't leave you without an answer. But I've never heard you mention investing in oil via an ETF tracking the market price. What are the pros and cons of that?
Well, look, it's very simple. When it comes to investing in the raw material itself, whether it's oil, gold, etc., you mentioned oil, but this applies to any of them. Generally speaking, it's not really worth it. It's not that interesting, okay? Because look, let's suppose you get it right and it goes up quite a bit, right? Let's say oil goes from, say, 60 to 100 or from 60 to 120, just to make it clear. Okay, that's a double. You get a 100% return. Great. Now think about what would happen to an oil company if oil goes from 60 to 120. Because what happens is the profit doesn't just multiply by 2. It might multiply by 10 or even 20, right? Because they have operating leverage. That means many of their costs are fixed and the variable ones aren't that many. So after a certain point, almost all of the price increase goes straight to profits. So in a rising market, you're less leveraged than the producers. But in a falling market, it's true that you're more protected. Because obviously, if oil drops from 120 to 60, you lose 50% in the ETF, but with the mining companies, well, probably not with the producers. In that case, you'd lose quite a bit more. That would be the scenario where it would actually happen to you. But I get that if you expect the market to fall, you wouldn't invest in an ETF of that commodity anyway. And then comes the most reasonable scenario, which is, let's suppose it doesn't move or barely moves. If oil is at 80 and doesn't move, you make 0. But an oil company at 80 could be printing money. So with the oil company, you could be making a lot of money, while with the ETF, you just break even. In a scenario where it goes up or stays relatively flat, it's worse. And in a scenario where it drops a lot, then yes, it's better, but in that case, you wouldn't invest here anymore.
All right, so we're wrapping up an hour-long show. 587 viewers across all platforms. Thank you all so much. Remember that on Saturday, we're going to premiere that interview we did in our studio in Malaga with Joseph Moore, business appraiser and master's, MBA professor, specifically in that field, business valuation. For all of you who are interested in stock market investing, what to look for in a company, how acquisitions work, which ratios to pay attention to, you absolutely have to watch it. And also, on Sunday, Sanhedrin. Netflix has released its results. Edgar is already analyzing them. We'll have a little surprise from Newlat, as Miguel mentioned, and we'll do a recap of everything that's happening in the market, which is quite a lot. So Sunday at 8, everyone be there sharp. Miguel, Albert, thank you so much.
No problem, Daniel. It's a pleasure.
Thanks to both of you. Take care.
And as you know, some questions were left unanswered. If you're a research member, you can ask them in our Discord, in the premium Discord. And if you're not, leave your question in the comments, and we'll try to answer it during the week. Wishing you all a happy Friday. Have a great weekend, and we'll see you Sunday at Sanhedrin. Bye. See you next time.